Good morning, good morning. Stocktwits Nation. It is Wednesday, April 2nd. It is the day after April Fool's Day. Yesterday, the joke was that Shay was not here, but he is back today. And we're also back with Brando Lee from Elite Options. And guys, there's a lot going on today in the markets. How are we feeling?
Bloody, 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 bloody. Not surprising though. Like yesterday, first off, I do like that we've had back to back. Again, I've been out of this off the screens. I've been on a work trip in Florida, but it looked like we had some back to back days of intraday bounces, and that felt nice to see because it could have easily been the new capitulation lows. Like we are still getting lower highs, and it's like okay, maybe there is some kind of short term balance. And I've been saying Liberation Day, the psychological effect of Liberation Day has been already priced in to the market. So now, if there's no weird, wonky surprises of like, I don't know, doubling down or some surprise tariffs that make things even worse, I do think we have a short term bounce. However, I just don't know if we're going to get any more clarity today. And because of that, that noise might result in continue the trend, and that might be the next leg lower. And I don't know, Brando, what's your take on today? Because I know there's a lot of half glass full, half glass empties, and nobody really knows. It's tricky.
Yeah, so I would say, like you said, right? Like the first 2 days of this week, we're seeing a bounce very similar to last week.
Hmm.
So the big question is there a double bottom here in SPX at 5,500? We got a back test there on Monday, held, had like a 150 point bounce from the lows. So that's the line in the sand, right? If we break 5,500 after today, Trump's speaking at 1 p.m. Pacific time on the tariffs. If we gap down again, break 5,500, you're going to see that next leg lower, right? So SPX 5,500 is the big level. QQQ, that 464 level is also the line in the sand. If you see both of those, I would say close under those respective levels on a daily candle, then you're going to see the market make a bigger sell off. Um, could SPX drop to 5,100? Very possible. That would put it down about almost 17% from the recent highs from this year. And then QQQ down to 424 would be that similar area of where we would get that almost 17% correction. Um, that's the August lows from last year for QQQ. So that's not out of the question. And for anyone trading, anyone involved in the markets, especially day trading, that's where you want to really pay attention to for this week is this actually a double bottom or are we about to start the next leg lower? So it's hard to say at the moment. Me as a day trader, you kind of just watch and then you react and basically, yeah, and then you go from there.
So,
Good. Okay.
question for you, Brando, real quick, because I have a thing. Again, I'm more of a long term investor. I have my trading hat on, but it's just really not my thing. I have a thing where if the key moving averages like the 21-week EMA, the 50 day a week SMA, they're all ticking lower, you have to wait until those revert back up because that's when 2022's happen. Where if you just waited until those key levels start sloping back up again, you have missed maybe the first 4 or 5% bounce. But guess what? QQQ went up 60 to 7% next couple of years, and you were able to identify the near term bottom. So for me, like we're below, like we were bouncing a bit, but like, are we really structurally changing anything that's been going on? And I'm like, no, like we're below the 200 moving averages. All the key technical levels are sloping. The psychological effect caused the market to break all multi-year trends, and now it's going to take some time to recover. So even if we finish like I don't know 2% green today, I think we need multiple fall through days over a decent amount of time window for us to feel like, all right, I don't have as much heartburn, and maybe we can continue going up.
Yeah, like I would say, the past like 6 weeks, we've seen a continuation of weakness. And yeah, the big question is how much lower can we go? Will the Fed cut rates in May or June?
Hmm.
And I think like after a 6 week, huge sell off where you're seeing Tesla down over 50%, Nvidia down well over 30%, Meta's down 25%, you have to ask yourself the question, okay, these are sector leading stocks, right? These are stocks that basically move the market. And after seeing already such a big pullback, my opinion, I think the Fed will cut rates around May, latest June, and that'll trigger more risk on for a lot of kind of growth stocks and for stocks and crypto. So yes, like technically, I'm looking at many different charts. A lot of stocks are under the 200-day moving average, and of course the 50-day moving average, but the market moves on news, right? And if we get less of a than what's expected today from what Trump's going to talk about with the tariffs, that'll help. And if we get the rate cut in May, then I think the market will bottom. But right, it's hard to say at this current moment.
Talking about news, we just got the Tesla delivery numbers in. Looks like that came in at 336,681, down 13% year over year. The estimate was about 390K. Guys, is this, I know the market was fearing the worst. Is this worst case scenario? Is this better than expected? What do you make of these numbers?
Nah, I mean, you have to ask yourself what's being priced in the stock when it's down 50% past couple months. Like, I think a lot of people were actually anticipating a 10% miss, and some analysts on the street were like, we might get a 2 handle. I think this was like, all right, it's clearly ugly, but it's ugly enough in the box of uncertainty that we're okay with it. Like, it's digestible of an ugly. And I think right now you can clearly see Elon's vision of he's sacrificing his EV business to fulfill his autonomy vision. So these delivery numbers are big rocks right now, but if the market's a forward-looking mechanism, we know the big rocks right now for Tesla will be the little small rocks in a couple years. And I think it's like, oh, it's ugly, but I think now the narrative for the stock is the delivery numbers will always be ugly now because Elon's clearly sacrificing it. And that's like part one. Part two is like, we got the energy storage numbers in 10 gigawatts. Like, it's up 160% year over year, their energy storage business. And that has legs. That significantly has legs for like the next couple years. And like, I'd love to see that. And I think the EV delivery numbers, like, I'm not surprised. And we're in that uncomfortable period of transitioning in a narrative from them being an EV company to a full-on real-world AI, and that's the price, that's the tax we have to pay for Tesla to become that full autonomy company. So I think also like what Tesla's down 3% on that massive miss. Like, I think that says a lot about what what shareholders care about the EV side of their business anymore.
Brando, what do you make of that? I'm looking here at the Model 3 Y deliveries. Year over year down 12%. All other models down 46%. So they still have the cost-effective option there that's bleeding a little less. You were talking about this a little on X yesterday. What's your thought?
Yeah, so I think that a lot of traders and investors were anticipating the softer demand, right? Originally, I think they were at like 418,000 was the first delivery estimate, and then they revised it to 377. And yes, it came in lower than that. But I think it's more, to me, more of like a tailwind. I think that everyone was expecting a bad Q1, and the worst could be behind us for that. And I'm just a trader, but I would say Tesla's kind of moving towards the direction of, the full self-driving, like the robo-taxi, and then they're making these uh, humanoid robots type of business model. So to me, it's more than just the car company. And yes, delivery numbers are important because it is technically a car company, but I think there's a lot more to Tesla than people think. And I'm not smart enough to bet against Elon. I do hold a big position in Tesla. So I think the worst is behind us. I think Tesla's going to move back up towards that 290, potentially break out through there and, finally get back to 300. But Tesla does have a history of having these long consolidation periods. And you just need to be patient, right? Most people, they get tired of holding for 6 months to a year. But if you look at stocks like Nvidia, right, it's in almost a 1 year consolidation as well. And that is a cult stock. People love Nvidia, people love Tesla, but when the whole market is in this kind of consolidation sell-off period, there's not many exceptions to, what's happening in the macro. So I think we just got to wait out what's going on, and if you believe in the company, then buy and hold.
So Brandon brought a great point up. Keith, if you want to bring up the Tesla stock, this history doesn't repeat itself, but it often rhymes. Go zoom out to 2011 to 2013 for Tesla. It literally did not move. It was flat for those 3 years. Inflection point. The next 2 years, it's 7x, 6x. Then it consolidated again for another 6 years from 2014 to 2020. It was flat for 6 years, and guess what happened in the following 2 years? It's 16x. It's been flat and basing for the past 4 years now for Tesla. Every single time in these basing periods, Tesla's been going through a narrative change. It was never like the cyclical exposure of their stock results in fundamentals not proving what the vision is, and people always like, oh, like Elon's just lifting up his chest and is talking nonsense. He's like living in a different world until he delivers, and now the stock reflects it. Same thing's happening right now. Like you're seeing his autonomy vision, but people are calling BS, and they're seeing their EV business dying down, and that's why they're flat. It's the same stuff that happened the past two flat range bound cycles. And I don't know about you guys, but if someone's shooting 100 on what their vision's been the past 20 years, why don't you think it's ballsier? It's more ballsy to predict they're going to fail this one time than not say like, oh, he has a stellar track record. He's probably going to deliver again. And if that happens, I just said they 7x during that after the first flat period breakout, 16x next, the one after that, and this upcoming one. If autonomy truly does fulfill what his vision is, it's the biggest TAM in mankind history, physical AI. It is applicable across so many different industries. And if Tesla solves that, it's not just going to be a 15x, to be honest. I think it's if they prove that they're going to be the leader of it, it's going to be a monster, like decade-long just expansion opportunity because it's a different business model. It's not going to be an OEM that has 20 to 30% margins. This will turn them into a 60% margin business. And that turns the whole DCF model upside down. And now you have to value them in a completely different way. So that's why the risk and reward is like so great here. And like what Brando was saying, he has a big position. I have a top 3 position in it, but it's a narrative driven stock. And it makes me like, oh man, fundamentals aren't there. If they fails, this is going to be in a $40 or $50 stock because it's an EV business at the end of the day if it fails autonomy. But I don't know. I think if I just believe in it. Maybe I have the Elon goggles on, but I just see opportunity here.
What's life like with those goggles on, Shay?
It's I have to take what's that? No, I was like, what's that pill to take for not being motion sickness? Because that's
Dramamine.
I have to take a Dramamine with my goggles on for sure.
Yeah, but I'm curious, like Shay, I we've talked about this a bunch. I'm curious, like when is that inflection point? The growth is slowing a lot. So even though they're still delivering a lot of vehicles, and like I buy your argument, like doesn't matter in the long game. But in like the midterm, when is that inflection point where the data is going to start to actually show evidence of strength in the other area? Or do you think it's already there, the progress they've made, and that's why you're doubling down?
It's not there. I think it's like the Austin this summer, the unsupervised FSD. That's like the biggest pilot in Tesla's history, to be honest. I also think like you saw the auto tariffs that Trump created. Okay, I call BS that Elon was not at all involved in that process. That it was to, I don't know, cannibalize all of the competitors. So essentially, these companies are gonna have to sell at a loss in their cars, or they're gonna have to raise the prices. And I'm telling you, people disagree with me about this. Consumers, doesn't matter how much you hate Elon's political views, they're gonna care about the bottom buck on their cars. They're going to. So if all the lesser quality models are becoming much more expensive than Tesla, do you really hate his political views that much that you're willing to spend $12,000 more on a less quality car than what Tesla offers just because you disagree with his politics? When you know, like in my opinion, politics are just a reality TV show. So like they don't truly believe in it. There's probably some chess move they're doing. So I think to answer, it's a long-winded way of answering your question, Katie, is like I think the Austin pilot program is going to be the massive pivotal moment. But I do anticipate there's going to be a significant amount of government initiatives towards their Optimus product. That's going to become the robotics angle will be accelerated. And I think right now in the current price, like Optimus is not factored in at all because it feels like a sci-fi dream than a near-term reality. I think once that starts getting more clarity, that's another massive tailwind on top of autonomy that Tesla will catch a major bid on.
I want to get your thoughts, Brando, on the trade, but real quick, I think one risk thing with the political entanglement is we don't know what's going to happen in the future. And so even thinking about a lot of these American automakers rushed to try to manufacture a lot of EVs, and they were getting a lot of incentives from the prior administration. And now it's like whiplash. Now it's back the other way. And it's hard to know like where things will go. And so I think your view is dependent on a certain political outcome playing out, but it's so volatile right now. And I think that could be, no one can do anything about that. That's just something to watch though, because how big of a risk do you think that is where now he's so in bed with one of the sides? If the other side triumphs, is it now even worse for him on the other end?
I mean, I fully think that like imagine being able to invest in a stock that POTUS essentially runs. That's like what Tesla is, to be honest. Like today, like
yeah.
I think I don't know. Again, like it's a leap of faith. That's what makes me so worried because usually when a stock's a top 3 position, it's backed by fundamentals. It's backed by today's reality of their moats and advantage. I'm doing a lot of futureless. I'm plugging the holes right now of what Tesla can become. And at first, that feels very speculative. And usually a speculative position entails for me less than a 4-5% allocation in my portfolio. Tesla's 9 to 10%. So it's more, I'm like, oh, this is way bigger than my risk parameters I usually provide. And it's because of that godlike complex that Elon has in my eyes that like he's produced every single time. I believe in him. And now with this, it's unprecedented that a CEO of a publicly traded company is that close to POTUS, like that intimately attached to POTUS. So nobody really knows the aftermath of what that's going to be provide. Like it could be an absolute dud because we've never had something like that, or it can be they have to create some kind of law in the future where if someone's that close to the president, you can't run a publicly traded company because it was that beneficial. I don't know which side it's going to be, but either way, that's where alpha's made when the market doesn't believe you and you believe in something that turns into a reality. That's really where you get those 5xers. So it's a price, it's a tax I'm willing to pay to capture that multi-bagger.
Brando, looking in like the shorter term, how do you play the news today? Are there any changes you're making to what you're doing over there? Or is this sort of what you had expected?
Yeah, so I would say like just kind of talking about Tesla, I'll kind of share a chart here. So, the big question is where do you jump in, right? Is this backside of the move going to last another month, 3 months, 6 months? No one knows, right? And for anyone that has, smaller amount of capital, you don't have, 100,000, 500,000, $1 million. There's a really important level that you need to wait for in order to actually jump back in the stock and catch a momentum type of trade. And to me, it's the 300 level, right? It's a round number. It's a psychological level that most traders are looking at. A week and a half ago, 2 weeks ago, Tesla got up to 291, 292, stopped. So if you're looking for a trade, if you're looking to jump back in Tesla, this is a level where I'm very focused on for trading options or even buying shares for a swing trade or longer term. If Tesla can't get back up to 300, then you're just going to see this longer, maybe multi-month consolidation until we either get more positive catalysts within the stock or something in the macro changes, right? Rate cuts in June, maybe July. So if you buy in this range now, I think it's going to be dead money, right? And anything from like 239 all the way up to 276 is just dead money. You're just gonna see longer chop in between those two levels. But once you see 300, I think you're going to see 363 fairly quickly. And if some type of positive news lines up this summer with the full self-driving in Austin, if there's a positive reaction to that and Tesla's near 300, I think you could see some type of short squeeze. So that's an area where I would focus on for trading options because that's where the risk reward is much higher to the upside, and you can definitely make a good profit. So
Yeah. Let's flip over to see what else is trending over on Stocktwits because it's only Wednesday and there's already been a lot of wild news happening. Sticking out immediately to me is Newsmax. Shy, I wish you were here when all this was happening yesterday. And Brando, I'm curious your thoughts too. This Newsmax IPO, we had a guest on. We had two guests on this week where I brought it up, and they were like, "I didn't even know about this. This kind of came out of nowhere." It looks like it's still being talked about a lot. It skyrocketed yesterday. Brando, any takes on Newsmax?
yeah, you know what? I didn't even really know it was being IPO'd. I saw yesterday that huge gap up got to like 287 after hours. But I was actually trying to find shares of it to short, go short on that one when it got over like 240, like 230, 240, but uh, couldn't find any shares. I'm gonna look for it again today, but let's see if an options chain opens up on that. I think it could be a good one where you could sell premium on that or go short. But in terms of what actually happened with it, I mean, I think it had what like a 700% increase from IPO price, which was I think $10. But yeah, I think it kind of looks like a chart like GameStop would be, right? Where it went from a few bucks all the way up to like over $300. So, but beyond that, I don't know too much about the actual company.
Yeah. And Brando, I know you got to jet off to make some moves, so thank you so much for joining us today, and you have to come back very soon.
Yeah, absolutely. Thank you so much. It was a pleasure speaking to both of you, and looking forward to jumping on again soon. Thank you.
Thanks.
Awesome.
All right, Shy, you talk about moats a lot. Does Newsmax have a moat vis-a-vis a Fox News or another cable news, or is this just like the same cult following pumping some of these other stocks is now rallying around NMAX?
So I think Newsmax changed everything. They're going to be the biggest company in the world, $1 trillion news media. No,
Oh my God, I was
no, it's a shitco, guys. It's a shitco. It's
like,
a meme
what
stock.
happened to Shy?
Florida changed me in just the 2 days
Florida
I was there.
man goes to Florida once, you know. Okay.
No, it's a meme stock, guys. Like it's worth 20 bill. You can't short it. It's going through a squeeze. I think the revenue is like $24 million or 20. Let me look up real quick. It is $80 million.
Yeah.
It's not profit. Like guys, it's 20, to put it in perspective. I made a post about this yesterday. You could Hims and Her Health and SoFi combined is worth less than Newsmax. That's just showing like the squeezability right now that's happening in the stock. It's gonna go back to the teens as soon as people can short it again, or as soon as the option chain opens up. Like I I think this combined with like CoreWeave's IPO, which also went up 40 something percent yesterday. I think there's a squeeze happening on the new IPOs and short lived. So don't hold the bag, and please don't. It's a rental. Don't think about it in actual stock. And as soon as you see it like breaking some levels, like just sell it because this will go down. What is it, 240 right now? It's gonna go down 90% eventually. It's gonna go back to
Yeah.
the teens.
One of those charts. Speaking of IPOs, I don't know if you saw this, Shy, but it looks like there was reports that Chime submitted a confidential filing. That's of course I'd say legacy neobank. They've been around since like 2014, 2015. You following that fintech at all, or did you hear that news at all? I know they've been trying to get out for a while, and it's been kind of stop and go.
So the window for IPOs for fintech is dwindling down rapidly. If you don't go public this year, I think you're going to be private for multiple years. I think if the consumer recession has some kind of reality towards it, it's going to make these neobanks or fintech names look ugly on year-over-year comps. It's going to be very similar to 2022 for them, where free money, all these fintech companies look great. It was like, look at this high growth, this membership signups. It's then it freaking deflated as soon as money stopped becoming free. I think once consumers start really feeling it in their wallets, like they're going to be, they're gonna, their discretionary spend is going to be impacted. Their willingness to buy things will be impacted. It's going to be going from, oh, I want this, to I can only afford the stuff I need. That's going to impact a lot of
Mm-hmm.
these names. So I think this year you're going to see. I wouldn't be surprised if you see Stripe go public at Q4 of this year or Q3 of this year, because the IPO window for these fintech names, it's this year or nothing. And I think it's going to be, you're going to see just a huge supply, and the demand really isn't there for fintech, and that's where the trickiness kind of happens.
Yeah, there's a lot of fintech drama, I feel like, lately. Of course, we made fun of Vlad's outfit, and he engaged with us on X, so we hope he's on the show soon. But outside of that, I know you were talking, Shy, about, okay, where does this put SoFi with Robinhood? I don't know if you saw yesterday, Anthony Noho was like in the comments on X and wrote like a very long response. And it reminded me of the conversation we were having, because your sentiment kind of reflected some of the comments where everyone's like, hey, what's going on? And it was very forceful note. I actually respect it. I think it's good when executives kind of get in there and answer. Did you catch this? And what do you make of that sort of response? I mean, that's one of those, that's good for you. I'm not going to read it. I did read it. But what do you think?
He's probably frustrated because he's feeling the heat from the board. The board is like, everything Robin has been doing the past year, this was your initial vision from the get-go. But you see their momentum in such a short amount of time. You just never got to that level that Robin is at already right now, even though you had a multiple year head start. Why is that? It's not poor corporate governance, it's poor execution. They devalued what retail investors can do for a stock. Anthony Noto just is not as willing as Vlad is to go on these influencers, podcasts, like streams, like really talk to a lot of these like new age media followings. And that's what really maybe doesn't move the needle as much as institutions, but it creates narratives for your stock where you don't have to continue to update every single quarter because these influencers are doing it for you. And it's essentially at no cost. And the amount of coverage that Robinhood gets now the past year alone, they're not paying for any of it. However, for SoFi, like Anthony Noto has to brand on the new stadium in LA. Anthony Noto has to do all these, like, they're doing the outdated marketing of it, and they missed the boat on capitalize. They have a SoFi following, big time retail following, but they're not like supporting it, and you can feel that. Where in Robinhood, they're supporting the influencers. They're flying the influencers out to their investor day and like making them feel like you guys are like part of the family. We respect you guys just as much as the Bank of America or Jeffrey analysts. Like that goes a long way. So I think the reason that he's feeling extra frustrated right now is obviously the Robinhood banking. That's like, you're really in our territory. Like we were always adjacent just because we're both fintech names, but like we weren't actually head to head competing. Only competition we initially had was, oh, the market's open, was from the audience, from the retailers. But now you're saying you're trying to target the underserved middle class, and that's essentially what we've been trying to do with neobanking. And Robinhood's doing a much better job. And if they become this full-on ecosystem, like SoFi's gonna have a really hard time, especially with their UI experience, a lack of innovation to compete.
I think you're right. I think Robinhood sort of lost its narrative for a bit, especially after some of the blowback from GameStop. And now, like, to your point, they're fully in the, like, we're for the people, we're with you. I don't know right now from like an IR or like a marketing standpoint for retail investors what the SoFi story is. And I think they got to figure that out a little bit, because Robinhood has a clear one right now where it's like, we are disrupting the future of any way money's being transacted. We are moving very quickly. We are leaning into new media. Like it's very clear and repetitive what they're doing. I don't get the same, I don't get that same narrative from SoFi. And I think the narrative is important because a lot of these are like momentum plays for retail investors who frankly are not as in the numbers as someone like you, Shy.
I mean, neobank was supposed to be the sexy new way of funding your life as a consumer. Does SoFi feel sexy in any way? Like their UI is outdated. Like the way Robinhood's doing it, the gold card. Look how you can get an actual gold card if you refer 6 people. The city of gold, they called their events. Like they are so good at marketing that now you can label them as some kind of media company now, with a brokerage arm, with a banking arm. Like SoFi is just a neobank. Like their whole spiel was brick and mortar banking is dead. JP Morgan, Chase, Wells Fargo, nobody really wants to go in person to do all these things. So neobank is a commodity. Everyone has that now. So like, what's the actual real sell in SoFi? It's their products. I think Robinhood is innovating at such a rapid pace that if you put your money in Robinhood, you probably can apply it to so many different things, and it feels cool. It's like a certain aura about it, and aura is something that you just can't duplicate unless you have strategy. It's not you can buy aura. Aura is essentially built with a combination of luck and execution. And I don't know, SoFi just it just feels like it doesn't have any of it. And the whole thing for them was to be the cool neobank. But if you don't feel cool, what's the point of having like there's just a neobank and that's a commodity.
Yeah. I want to flip over quickly to where we're at in the markets, but real quick, I just was looking at the SoFi, the investor relations page, which is a great way just to see everyone has those corporate overviews. Like what does the blurb say? You know, they update these not all the time, but they refresh them. SoFi is very soft compared to where Robinhood's at. So financial independence, I know independence isn't just being rich, it's getting to the point where money works for you. Like that is even like the color scheme, very different than Robinhood of like, we are going to be the one place where you transact anything. You want to do prediction markets, we got you. You want to open a 401k, Roth, we got you there. But it's more of a softer message. And I wonder, just being in the industry for a while, if this is sort of an outdated framing. This feels very like 2020, like we're democratizing, we're learning, and I feel like we're in a whole other era now, and that's what Howard Linden talks about all the time with the degen economy. People get that, they get the democratization, but now they're like, okay, what are you building for me so I can make money? And it's like a different sell. So I think that's going to be interesting to watch how they try to counter position. Is there a market for that softer message, or are they going to kind of shift and be a little more like Robinhood?
I mean,
time will tell.
Time will tell. Yeah, for sure.
Let's check in on where we're at in the markets right now. It looks like the Dow is down about 300 points. Tariffs. We haven't even talked about tariffs yet, Shay. How you there, Shay?
Are you there? Yeah, you're lagging. Sorry. Can you say that again?
Sorry. I was going to say, we haven't even talked about tariffs yet, and it's Liberation Day.
Yeah, I mean, I think a lot of people sorry, I just got into a video option right now.
Oh, do tell. Let's go there, and then we'll go back.
Oh, okay. Yeah. So Nvidia, my favorite metric for Nvidia right now is the anchored average VWAP from January 2024. Every single time, if you just track that one metric, every time it's hit it, it's bounced. In April 2024, whatever happened on that really ugly candle on April 15th, that's where it bounced. Yen trade crisis, that's exactly where it bounced. Worse on beginning of March, that's exactly where we bounced. We're at that point again at, what is it, 105. I'm like, so I was like, oh, it's down 3% right at the open at 107. Like Liberation Day, I think it's going to be somewhat of a catalyst because people maybe front ran it a little too aggressively, and there might be a relief bid. I don't know what it might be, but like Nvidia will be in the leader of that market bounce, in my opinion. And I just like, oh, I'm gonna do a quick trade because it's essentially at that level. It's less than 2% away. Maybe you'll get there, and I front ran it a bit, but we have such a catalytic event today that I'm okay getting a little early because we're gonna have a big movement potentially. So I did think, oh, Nvidia's bouncing a little right now, but yeah, I think that was the level. I was like, I'm gonna add it, and I have my cash positions 15%. So it's like, I'm already built for like if we have a new leg down, like I'll add to my higher conviction long term names, but I want to trade a little, especially when the market's down this much already. Yeah, Nvidia's now above 108. So
is this you crawling out of defensive stance slightly? Or are you still defensive but kind of making some moves?
Me having a cash position more than 5% is hyper defensive still. So like at 15%, I'm like, fuck, this is like by far my biggest position. So I'm still defensive. Like right now, I think there's a couple great deals in my portfolio. I don't want to add because I'm defensive. And I still don't think we had that capitulation bottom. I still think we're gonna get a newer low. I think Brando might mentioned that as well. Like I I still think that we're gonna hit a new low in Q2 of this year before the summer. In the summer months, nothing really changes drastically. It's usually trend setting. So if we're like this the first half of the year, nothing will happen in summer, and then September is just around the corner, and you never want to hold in September. Things just get really ugly, and it's just like we're setting up for a really bad year, and that's fine. But like, and there's also a pretty big disconnect right now because I'm seeing my portfolio is green today. I think growth is catching a bit. I'm seeing IonQ up 4%, TMDX 2%, Palantir 1%, CrowdStrike's green, Cloudflare's green. Yeah, so Tesla's down less than 4% now. We're getting some buying today. That's nice to see. But yeah, I'm still defensive, guys. Like
Yeah.
I'm in no rush, and yeah, I kind of want a new, but I'll take it. I'll take what today's
And
happening.
I think speaking of IonQ, I think we got their CEO on tomorrow, right? It's tomorrow.
Yes,
What,
Nikolai.
are you excited? You got a lot to ask.
Yeah, I'm very excited because I've always disagreed with what Jensen's been saying about the quantum space. I think he's talking his book a little or protecting his book a little. And I'm seeing firsthand evidence on what IonQ is doing for the practical application of their trapped ion technology. It's being used right today in the AWSs, the Microsofts. So I'm like, what do you mean it's like 10 or 15 years away? These like hyperscalers are using them right now. And you're seeing constantly updates on the validation of these technologies. Like, and you're hiring rapidly for quantum computing internally in your own organization at Nvidia. So like, what do you're verbally saying something that does not match facts or what you're even doing internally on FT. Like you don't hire a drastic amount. You don't hire teams if you don't think you can make money in less than 3 to 5 years. You don't hire teams for, oh, like in 1 to 2 decades, I think we'll probably make some money and we should start hiring now. No, that's not how it works. Like it just isn't. So I think all other pure quantum computing plays in the market are R&D companies. IonQ is not. So this is where like tomorrow's call, like we're gonna get the real of like what's actually happening from the one quantum computing name that is an R&D. It's actually being used today, and how they're gonna be dictating their future strategy with Nikolai at the helm now. Like you're clearly seeing the way he talks about IonQ, as great as Peter Chapman was. Like it's totally different, and it feels very he gets it where he's not hiding facts that maybe he doesn't want to he's sticking his neck out, and that's exactly what you want to see as a CEO or of a first mover in an early sector growth theme. You want to see CEOs stick their neck out and deliver because that's when you get that aura I talk about like all the time. Like Palantir, Carp has that aura. He stuck his neck out, he got rewarded. Vlad stuck his neck out completely. He went on publicly on so many podcasts and like public appearances after the GameStop fiasco, and he was like, publicly was telling
He
his
got
vision of
roasted
how
to his face. He just took
yeah,
it. Took it
he
on the
just took
chin.
it, and the respect he
Yeah.
got from that was wild. And now his vision is becoming a reality, and people who believed in them because he was so open about it. That's a cult following. Like cult followings have a negative label, but like also that's where you build lifetime followers as well. And I think Nikolai's doing a great job of that. So I'm really happy to see it, and can't wait to pick his brain tomorrow.
Yeah, that's tomorrow at 9 a.m. I'm looking forward to that as well. And I think, yeah, the fact that he's even coming on here and relatability is kind of the new it factor for some of these executives. And it's a very tough game to play. You can easily step in it. But I think people, like if you look at Palantir, people can relate to being unhinged sometimes. People can relate to saying things that are a little out of pocket. People can relate to being emotional or excited. So that'll be a great interview. That's tomorrow, of course. Back over to today, 4 p.m. at the Rose Garden. I feel like this is like The Bachelor, where like you know the finale's coming, and it's like they know what's gonna happen. And they're like making you wait till next Monday to see like who's gonna get the rose and who's not. Like this goes back to like what you said. Everything's kind of like reality TV. Like I can't remember the last time like a speech like this was like an economic announcement was this hyped. Like, can you, Shy?
I think it's messed up. They did it after the market, first of all,
Okay,
you
elaborate.
because you have to position yourself option wise, and you can't do anything with your options after the market. So like you actually have to position yourself ahead of time and just hold it until the next day. So that's like, wow, you really have to believe in one side of the camp on what's going to happen today. And there's no reason that he couldn't do it at 2 p.m. Eastern. Like that's usually
Yeah.
the 2 p.m. Eastern is always a slot for like these catalytic moves and conferences, etc. He chose 4 p.m. for a reason. There is a reason why they did that. So I think
I'm going on X to see if Eric Trump is telling us what to do this time. I don't think he's going to do that. Crypto's a little looser. But yeah, so I guess like why would he do that at 4, do you think? Just to create a little more chaos? Do you think there's like an edge? Like
to
I don't want to
control the
insinuate
narrative
anything.
more, maybe
Mm.
like just because like maybe control the narrative, let people digest the material a bit more overnight, and then you see the real move in the market rather than you take the emotion out of the impact potentially of
Mm.
what he says. And also like maybe he wants to see the nations reciprocate their tariffs before the market opens, so like you have all the information. Like maybe you're seeing already some signs that people are taking tariffs off
Yeah.
American goods to like satisfy Trump. Like maybe that's going to be the
Israel
continued.
did. Yeah, you're
Yeah,
right. You're seeing that start to slowly leak out. Maybe that's going to influence other people
exactly.
before.
After like they hear what Trump's going to say, maybe they all follow suits, and then by tomorrow morning, doesn't matter what Trump says. Like a lot of nations are like taking their tariffs off, and it worked what Trump wanted, and the market's going to go bounce hard. But maybe that's a part of the reason. But there's a reason why he wanted there to be an overnight digestion period, and I think that might be a good thing, but also it's annoying for option traders. Like I'm not an option trader, but you really have to position yourself ahead of time and hold that conviction overnight.
Yeah. And there's also the factor, there's reports coming out that as of last night, he still hadn't decided. Um, Other reports, I mean, I think he's in an okay spot no matter what. There's been a lot of reporting saying, if this goes sideways, it's Lutnick's head that's going to be called for. And they've already started like, their stories already leaking about Lutnick, like even yesterday. So it's like, you could tell like they're sort of hedging. So you have this whole theatrical sideshow going on in addition to just like digesting what's actually happening. Yeah, and I'm curious because sometimes it seems like the whole theme of the tariff conversations has been like 2 steps forward, 1 step back. We're going to do this. Oh, we're not going to do this. And I think where I'm looking at is like I feel like the nuanced, like tiered approach that makes sense to me, but I feel like that's just not this administration's style. I think they like a headline. I think they like a tweet. And the message is a lot simpler if it's this broad, all-encompassing, flat sort of tariff that goes out. So I guess we'll see. But based on like, you think this is all like already priced in either way, Shy, or what do you think if the tariff news later is softer than everyone thought? What do you think happens tomorrow in the market?
Oh, we bounce hard. I think we bounce really hard.
But you still think we'll hit lows later on in the year?
Yeah, because I think the tariffs might people got clarity on tariffs, but the issue is that there's still tariffs, and I
Mhm.
think that's going to be the anchor on any kind of bounce we have. Or there's still tariffs, and you're going to still see a lot of companies like this upcoming earnings cycle adjust their expectations or adjust like what their new reality is, and it's going to hit their impact due to currency headwind issues. Like it's going to be a very noisy earnings cycle, and that's what the market hates: noisy periods. It's going to be a very noisy period. I think for putting my enterprise hat on, my C-suite, now after today, I think it's going to be a lot easier to control your risk now in your enterprise, in your organization for future decision making. Like right now, you're second guessing everything because you're in a wait and see period. And that second guessing leads to hiring freezes. Your IT budget isn't as aggressive as it should be for AI. There's a second guessing causes a slowdown on a lot of business spending, and that is impactful for your own internal revenue and also for the whole environment. So I think after today, they're able to finally have a box to have their risk control in and they can maybe make future decision making on that. So that's going to help. But I do think we're in April already. So all the upcoming reports, the last 3 months already happened, and this tariffs is happening today. So all the upcoming earnings reports will be backwards looking on a really noisy Q1, and that's going to be leads to a lot of volatility. So like earnings, I don't think will save the day, and that's going to be the biggest issue on like what might be the next catalyst for the next leg down, because tariffs will still be there. But if earnings don't deliver and you see the impact of it already, it's going to have some FUD, like fuel on top of the fire. And like, oh man, as long as the tariffs are here, these kind of impacts and fundamentals will continue, and that's going to be detrimental. So I don't
Yeah.
sound I sound like a big time bear, but like guys, I'm a bull long term. You gotta be realistic on today's reality.
No,
And
you're
Nvidia's about to go
BTB.
green.
You're BTB, big
Yeah,
time bear. What'd you just say? We're about to go green?
Nvidia's about to
Oh,
go green.
Nvidia. I'm like, what just
But
happened? I
yes,
missed.
QQ is about to go green too.
Okay.
Like we're catching the bid.
All right. You called that a few minutes ago. Yeah. And of course, earnings season, I mean, these companies only have a handful of days, some of them, to digest the tariff decision and come up with their messaging and how they're going to outline the go forward plan before they're reporting. So it's always, it's funny. Like, I feel like it was just earnings season, and now in a couple weeks we are back in it fully. Let's shift over. Do you want to pull up the QQQ and talk about that a little bit, Shy? And then I think we did get some new job numbers in today from ADP that were a little better than expected. But then I was also, there's some Wall Street Journal reporting on some of the consultancies that could be interesting too to round out on. But let's go back to QQQ, because you mentioned growth stocks having a bit of a good day over there.
Yeah. So QQQ again, guys. I'm not. It's kind of scary how much we got rejected at the 200-day moving average on QQQ when we bounced 2 weeks ago. That's exactly where we got rejected. And I'm like, oh, wow. That's like a huge tell of like, we're not ready. So as soon as QQQ, like they need to clear 496, that's 4 to 5% away. But we don't just have to close above that. Like we have to have a couple follow through days above that. And until we do, like I'm defensive, and I just think that right now, if I'm just using the market bottom, which is January 2023, that's when we've been really rallying for QQQ. That's when a lot of big tech started rallying. There's a volume shelf that's happening that's forming around 440 to 445. That's a pretty big volume shelf. That's essentially also where the 100-week SMA level is at. So I think maybe that's where we get a potential. If we get a new leg lower, that's where we can get some resistance. But I'm not getting really. I just see I see us breaking 400 this year on QQQ. I think
Wow.
that's essentially the 200-week SMA level is at 383. I think by the time we reach 400, who knows how long that's where that level is going to be. But I just think we're in a digestion period with so much macro pressure that you're already seeing big tech companies like not caring too much about the shareholder value. They're treating it as an investment year. So like, I think because of they're not going to be the heroes that we were accustomed to on any kind of dip. Like, who's going to be the new leaders of this bounce that we get? Like, nobody really knows yet. It's not big tech. It's not semiconductors. You can't say China names because those are purely rentals. It's scary. It's bad. It's bad times. But also like, I don't know, we're down 15% already from the previous high. So like maybe we're just range bound for a while, for 6 months. Like we just don't really go too much anywhere, and that's would be great because then these levels can like maybe start slipping back up. Everything catches up with it, and we're in digestion period. But either way, I'm not getting bullish on QQQ unless we break 496.
Okay. When you say like having some of these positive days in a row, how many days you talking? 2, 3, or need like a
week,
long
a
a
week.
week? Yeah,
Yeah,
longer
a week.
streak.
Because like Spy was above their 200-day moving average, I think. Let me see. Yeah, Spy broke above their 200-day moving average on March 24th, 2025. And like, oh, that's nice. It closed above it. And the following day, I was like, oh, okay. It was low volume, but like it closed above it, so it was green. And then we got that big rejection below it. And I was like, oh, wow, 2 days it can only last above their 200-day moving average. That shows me it's not ready. that's like why I need a full week, because that's enough of a follow through period where you see people feel comfortable enough that it's that 200-day moving average is feeling like a support rather than a resistance, and now it's giving enough foundation for that next leg up. So, but yeah, that's essentially my thought process around that and being patient.
Yeah, we'll keep an eye on it. We did quickly. I know before we're at time. There's so much to talk about, and you were away a couple days, Shy, and I was like, there were so many things we could have talked about that were just stored up. But we did get some new job numbers today from ADP, and it's like the same trend of data just being all over the place. Seems positive, seems negative. The ADP reported 155,000 private jobs added in March. That was a sharp increase from revised 84,000 in February, better than the forecast. The forecast was only for 120K. Wages, earnings also rose by 4.6% year over year. So that's good news, I guess, but it feels like on the macro side, it's kind of, we get one report over here, and then we get something that counters that narrative, and it's hard to make sense of all that in the aggregate.
It's, to be honest, it's very surprising that private employment continues to rise. Like I'm kind of baffled by that, especially February being revised higher. This is not good for the Fed cutting rates narrative. So I just think it's such a delicate balance, because the whole market was pricing in a soft landing, and that's essentially inflation going lower while not breaking the economy. Like employment's not going to break while inflation going lower, and like we're going to get out of this better than ever. But that's a delicate balance, because you're always going to be finding the narrative of recession and inflation, and that soft landing is just the dead middle of both of those. So when you get really poor employment numbers, the recession sound goes higher, but inflation will go lower because the Fed is going to cut rates to save the economy. QE. Today, we got that, all right, maybe the recession was overblown for this one metric. Employment's not breaking. It's actually accelerating for some reason. So you have to ask yourself, like, does the recession fears scream louder, or do the inflation scream louder in the market? And right now, I think inflation is a lot harder to get out of than a recession, but I might be the minority in that. So I like to see lower. I like to see more pain and more detox. And I was with some people this week, and they were like really smart people, and they were pretty adamant that there's gonna be no rate cuts this year. And if that happens, like, there's going to be a recalibration of expectations for the market. And right now, I think it's 2 rate cuts we're pricing in. Like, if there's 0, that would be really bad for the market.
Interesting. It's always interesting to hear what they're saying. Not on TV, not on X. Yeah, there's also, speaking of employment, there is this really interesting Wall Street Journal report that covered a topic we've touched on, Shy, about just these big consulting firms, many of them publicly traded. So your Accenture, Deloitte, IBMs, they're all being kind of asked to cut back their scope with the federal government. Billions and billions of dollars have cut scope. And so it was interesting. Some reports were saying some companies even stepped in it harder, because in proving they were going to cut scope, they proved that in like 100-page PowerPoints, which I think is the entire joke of consulting, is that you're wasting time doing the PowerPoints. But even like a Booz Allen, they generate $11 billion in revenue from federal contracts, and that's the majority of the revenue. Are you watching these public companies at all as the Doge news continues to kind of take shape?
I don't know. I don't think so. I really don't think so. I think we're in a period where information doesn't matter. It's like stupid, but information truly does not matter right now. It's like there's so many narratives you can pitch for every single information out there that it's netting itself out. There's going to be a pro and a risk. End of the day, there's one thing that matters, is this high stakes poker game we're playing at, and there's one individual in charge of that poker game. He's the bully. He's thinking he's a shark, and everyone else is guppies, and they're just like, he's trying to show them, like, you guys are all guppies. Remember that. Like, Like, you guys are eating at you're eating at Nobu, but who's picking up the check? This little guy, this guy right here, America. So like,
This
if
little
you guys
guy.
don't realize, like, you guys are eating the same meals as I am right now, but don't forget, it's because I'm
Mm.
picking up the check. As soon as I stop, you guys will start eating at Sizzlers, not Nobu anymore. So I think that's like what Trump's kind of get at right now. And unfortunately, when you get accustomed to something that is just so like you're just like eating high quality food like Nobu, and you're not
Mm.
having to really pay the cost of it. As soon as that faucet gets turned off, there's friction, and there's like, oh man, like you're being cheap. You're being a penny pitcher now. Like, you're being selfish. Like, what's all self interest, man? When they're forgetting, like, they're only sitting on the table because of the rich guy. So
Mhm.
that narrative change or that conversation gets ugly initially, but you're seeing nations maybe right now like submitting the white flags of like, all right, we'll take the tariffs off. Like, sorry, like,
Yeah.
I want that good fish again. I don't want to eat that plastic steak at Sizzlers anymore. Like, please let me set the table again.
Yeah, I also wonder with the consulting stuff if like there is a shift across industries of services to sort of tech data. Is
Uh,
the loss of budget to these going to a Palantir or something? If are you shifting it to more automated data focused partners governmentally versus these the analysts doing the decks?
so I again, I lifer corporate strategy guy over here. You don't need us. You don't. No, you don't though. Like, that's the thing. Like, you really don't. Like, once I got 2 years ago, like once AI got like really mainstream, I was like, holy fucking shit. Like, I'm cussing because this is this is gonna impact so many industries, so many jobs. I think that you're still going to need like someone to create a narrative that's digestible to C-suite and the stakeholders who can like actually adjust business behavior. But you're not gonna need 10 consult. You're not gonna hire. You can have one contracting consultant now rather than hiring a firm that has teams to help you. Like, those days are behind them, and these consulting companies, they overcharge because it's you don't have the FTE to go through the data and create a narrative, but now you have AI tools to help accelerate that digestion, and you just need, like, maybe internally now these companies, we're hired like a couple consultants now internally, and they'll help us with this narrative change. We don't have to go external anymore and pay stupid amount of rates because they're using they're probably going to be using the same AI tools that we can use. All we need is someone to communicate that story to us, and that's a couple people. I don't need to hire a firm.
Yep.
So I think consultants are dying, and they deserve to be. To be honest, I'm sorry guys, but I'm one of you guys. Like, I just think that you guys are.
You'll always be providing value, Shy. Always. I did just notice. Also, Rivian reported deliveries, and they were also underperformed, and they're down about
Oh,
5%.
so they didn't benefit from the left.
No,
Interesting.
so
I thought they
maybe
would.
not good news for Tesla, but that seems more of a trend across multiple players and not just a statement about Elon Musk. We are basically at time, but let's take one more check in to see how things are going. Shy, plans for the rest of the day with your portfolio? You just chilling? You doing any other moves? What's the outlook over there?
So when I'm in defensive mode like this, I'm not going to be trading as much. I'm not going to be investing as much. This is when I do my research. So I'm going to be doing. I have a handful of lists that I have dozens of names I've been wanting to research more of, and that's when I say, like, I'm in the lab. Make this reference all the time. Like, I'm in the lab. That's me just in my office, like literally studying these companies, hearing the presentations from management, like seeing like, all right, once we come out of this, like, where do I want to be positioned in my portfolio? Because these macro-driven pullbacks, like, guys, they don't happen that often. They really don't. So when you get a blessing like this, a QQQ being down 15% in less than 2 months, this is the time where you can really orchestrate your portfolio into names that you might have had FOMO on, you missed out initially, but now these high conviction winners are pulling back 25, 30%. They're giving you the window to, like, all right, you missed the first move, but the thesis hasn't changed in our company at all that dictated why we moved so much past 2 years. Now you can join the party at a 30% discount and be part of the next leg up, because 80% of the time the market is going to go up if you widen out the time zone. So I think right now is like I have some positions that I am in the minority on why they're going to be winners. But if the ones that are clear winners that were just ran too much, valuation was too expensive, and pull back, maybe I need to reallocate towards that and cut the loss of the ones who aren't performing. That's the kind of strategy you need to do in research, and you're gonna have time to do that because market's not gonna be V-shaping anytime soon.
All right, guys, you heard it here first. Get in the lab. Like, I feel like that's like an Eminem and Dr. Dre reference somehow. But get in the lab, but also follow along later today with, of course, the big announcement at 4 p.m. Liberation Day is happening. Also, tune in tomorrow. We have that big interview with IonQ CEO. That's going to be absolutely fascinating. So thanks for tuning in, and we will see you back here tomorrow morning.